Well, it's great to be with you today. A lot of our clients are obviously wondering what's going on in the markets. And as you and I have just recently talked, it's hard to keep up with Trump and everything he's doing. But a lot of the markets are adjusting, getting somewhat spooked as a result of the new tariffs that is being deployed by President Trump and his administration. And so I know you got a few good slides here turned up for us. So the big question is this. Hey, Charles, in about 5 to 7 minutes, help us understand what's going on in the markets at the moment and how do we see this lasting maybe for the near future? Is this a short-term fluctuation? Is this a long-term trend? And give us a little information if you could, and input.
Sure. And thanks so much for having me today. I wanted to just show a quick chart here about the S&P 500 and what we've seen over the last 3 weeks. And this is, if you note the purple line there on the chart, as you have seen, we've had a pretty sharp sell-off of right at around 10% over the last 3 weeks or so, as I think investors are starting to wake up to the idea that Trump is actually serious about some of the things that he has threatened on the campaign trail. It's actually surprised me what Trump did during his first term in regards to tariffs. He was actually and his team was very strategic about how they implemented tariffs. And that did not actually lead to a rise in inflation. This time around, though, the tariffs are much higher. They're much more broad-based, and that can be inflationary. And he also seems intent on following through. There was a lot of people where he had actually talked about a lot of these things over the campaign. A lot of, I think, market participants didn't feel like he would necessarily follow through, but he has certainly done that over the last month. And that is starting, the implications of that are starting to get priced in to the market, which is why we've had this sell-off. Now, what I did also want to point out on this chart, though, is that the light blue line is earnings, which is, if we look at earnings are in the denominator of valuation, which is price to earnings ratio. Earnings haven't really sold off or anything like that. So this is the sell-off we've had to date, at least, is speculation about what might happen in the economy down the road. And you know, we're not seeing that in earnings yet. But there are some indicators where we are suggesting that we might have a bit of a rough patch, given some of these things.
Excellent. So maybe just a quick update too. I think you have another slide here for us. I'm just going to progress to that if I can. And this is the repricing recession. This word recession is really what spooked a lot of folks on Monday for sure, as President Trump was talking over the weekend about that we might be potentially now looking at a recession. I know it's a term that you and I have talked a lot about over the last 2.5 years, and we felt like a lot of the leading economic indicators was pointing to that recession. It never really occurred, and our conclusion was that the dynamics of COVID and its uniqueness was really turning a lot of those leading indicators pointing to a recession that we obviously staved away. And the Fed's whole discussion last year was about whether the Fed can hold off this recession by the timing and the amount of interest rate reductions as we were, fighting inflation. So here we hear the word again, recession, kind of out of the blue from the president. What chart do you have here for us, Charles, and what does this all mean?
Yes, this is the Atlanta Fed's GDP Now indicator, which is supposed to be a real-time forecast for Q1 GDP, which we see has had a dramatic drop in the last few weeks here, as some of these things have have been implemented. As many of you know, it's actually kind of hard to follow because tariffs have been announced and then they've been delayed. Sometimes, Trump comes back and says he's going to increase them, but then he backs them down. So there's been a lot of variability as far as the announcements go, but a number of them have been put in. And what this indicator is showing is that basically as these tariffs are starting to be implemented, then what those effects to GDP could be in real time. And to Hilgard's point, for the last couple of years, we've had a number of very historically reliable recession indicators, such as the inverted yield curve, the top 10 leading economic indicators, lots of different things that have suggested that we had a high probability of recession. One of the things, or I think the main thing that has kept us out of recession has been the exorbitant amount of fiscal and monetary stimulus that was done around COVID, and the time it took for that money to work through the system. And one of the things that led to very large deficit spending. And one of the things that the Trump team is proposing is, and this is a part of the Doge movement as well, which is a dramatic pullback in fiscal spending kind of across the board. And so if that was to happen, that has been something that's really been supporting the economy in a lot of ways. If that starts to get pulled away, then it could, certainly sort of, lead us into a recession, because we've had these other things sort of in there for a while. So I think that's kind of what this chart is showing, that, some of those things that were pre-existing conditions, now it looks like we're getting a catalyst that might be pushing us over the edge, so to speak.
Yeah, and again, recession would be 2 negative back-to-back GDP growth quarters. So 2 quarters in which the GDP, which is gross domestic product, which is really the number for total output of the economy. If 2 of those are back-to-back negative, then we technically are in a recession. So a lot of uncertainty, a lot of fears. Some of these tariffs have kicked in. It looks to me like March 4th. Some of these tariffs have kicked in to Mexico as well as Canada. Increase of tariffs over to China. Where is that tariff standing at this point in time? I think it moved from 10% up to, what was that percentage again, Charles?
20% for China.
Yeah, so China went up from 10% to 20%, and that was also March 4th. And then the tariffs to Canada and Mexico went into play on March 4th as well. And so just probably we still have to see what's the impact of that to the economy, economical growth, and certainly to inflation. And that will be another fear that we would have to look at. So some uncertainty, the market is acting as a result of it. A lot of our strategies is a position to expect volatility, to manage through volatility in the way that we plan your monies and the way we layer your wealth. Whether we use guaranteed income sources, whether we use downside protection through a lot of our different strategies that we utilize, and whether we also look at wealth that is in a growth state that we don't need access to for at least 5 to 10 years. Those are ultimately the ways that we are protecting you. This day-to-day, obviously, we don't control President Trump and these tariffs, and won't control the way that the markets are reacting short-term. So thank you for being with us here today. Thank you, Charles, for your input. Hold on fast. If you need to have a conversation, feel free to give us a call. Let us have a conversation where we can go through more of the details, but expect volatility in the short term. Thank you, Charles.
Thanks, Hilgard.